Hey traders, John Howell here. Happy Monday to everyone. Hope you guys had an amazing weekend. Today we're going to be looking at the markets, getting ready for this week moving forward. A few things I want to share with you, and I want to share something with you that there is going to be there's a big paradigm shift happening within the markets. The last 30, 40 years we've had a paradigm shift where savers are going to be losers, and that's been the big theme. But I really do believe the next 40 years, savers are going to be winners. I'm going to share with you the reason why I think our kids are going to be blessed with that saving mentality once again. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders. Make sure you grab that free trading course. You can see it the link in the description. I used to charge for that course, about $500 I think I charged for it, but I'm giving it away for free, just for a short period of time. I think I'm going to give it away to I think I've got 2,000 people in my mind to give it away. I think I've got over 1,000 people already got it, so I think that's the number I'm going to use, and then I'll shut it down and start charging again. So link in the description, guys. Go get that free trading course. So the thing that I want to share with you what's happening with the actual stock market itself. And then I'm going to get on to that thing about savers and so on and so forth, because I think it's going to be really interesting. So looking what's happening right now on the actual market itself. Man, my voice is still not 100%. If you guys, I think it was at the start, was it last week or the week before I did the Raw? Oh man, my voice is not the same anymore. I think I've destroyed it 100%. It's just like, right, transitioning period. And then every time I try to, for you voice specialists out there, what the hell is that? So if I talk normal like this, it seems to be okay. But every time I try to go really high, it's like the high notes, like the voice just goes absolutely nuts on me. Anyway, for you guys that are new to my videos, welcome. I did a thing last week when I roared, and I won't get into it now, but I think that's it killed my voice box. Anyway, it's all good. So looking at the stock market right now to us, you can see that we had a bit of a down day on Friday here, and that's actually a pretty bearish pattern. So I am actually expecting to see this thing actually have a bit more of a downfall. If I bring up, there's actually we're actually in this overall sort of channel here, as you can see, right? We're in this sort of channel or megaphone or whatever you want to call it, right? Something like that. But you can see we're actually in this channel here. So I wouldn't be too surprised to see if we did get a fall through here to maybe get like a bit of a flushing period. But maybe, just maybe, we're getting to we're going to be building a base, a bottoming pattern overall. And this is where I'm conflicted right now, right? I'm very, very, very conflicted right now in the overall picture. Now, thank God I don't trade on my overall picture, but I'm very conflicted on the overall picture because part of me says, okay, we're probably going to be seeing a free fall, and I'll let the markets do the talking for me. But part of me says we're going to see a free fall down to probably down these lows through here overall, right? Probably over the next couple of years, we're probably going to see that. But then when I look at the fundamentals, like people say trade based on fundamentals, right? But when I start to look at the fundamentals of the markets, and I zoom in on this, let's actually zoom in on this thing here. Come on now. There we go, right? When I zoom in on, say, this is the consumer sentiment report. Every time we got down to this, like, well, look at this here. The last time we got down here at the, what's that, the 50 level? Yeah, the 50 level. We actually got a bounce in the consumer sentiment, and that was actually the bottom of the markets. It get flushed down and the bottom, and then we spent a bit of time through here, and then the consumer sentiment actually started to rise through there, and that was obviously through the late 80s, right? And then obviously the early 80s, we had that obviously recession period there, and then that was the early 80s through there, and then 1981, and then obviously we had another recession through there. And then the market boomed, right? And you can see the same thing through here. So we can see we actually got down to that 50 level. And then we've actually got a bit of a bounce in the consumer sentiment report, as you can see. So part of me says that overall, we're probably going to see a bit of a rally here soon. Now, again, that's just the big picture. We don't know when that's going to happen. But you can see here that we generally have these, the consumer sentiment is really, really negative before we actually get a very overall big move. But again, this can stay down here for many months, right? Because like, for example, we look at back at 2008. If you look back in 2008, you can see it actually stayed down there. This is June 2008, and then November 2008, and then March of 2009, right? So it can stay down here for many, many, many months before we actually find an overall pattern within the markets. And as you know, the markets bottomed around the end of 2008, 2009. So it was through this period through here. So this is telling me that we're possibly getting ready for a bottoming pattern real soon. But on the short term, looking at the overall short term analysis, it does look like to me we're going to have a lot more downside to come. And if I had to use technical analysis as a point of view, I'd have to use this sort of channel pattern through here. Overall, guys, I really do believe we're going to start to see a retracement back down towards, say, the 19,000 on the Dow Jones. Looking at the S&P 500, we sort of have the same sort of thing as well too, right? So we have a bit of a drop down through here. So I do believe we're going to start to see a movement down towards this bottom level through here. So possibly, depending on how fast it is, maybe the 3,000, middle 3,000 level. So yeah, so that's actually where we are right now on that there. And again, we've got this sort of a little up and then a back down again. So I wouldn't be too surprised to see a bit of a free fall on a short-term basis back down towards the bottom of this trend line. And then also looking at the good old Nasdaq as well. You can see we're actually compressing down through here, right at this level of support. Once the Nasdaq is the one that's probably going to get hit the hardest, because you can see here, right? Once we actually break this sort of 10,500 level, you actually can see. Look at this here. That's just pretty much straight up through there. A little bit of supports, but not major supports, right? That's a major support. That's a major support. So once we actually break, this is going to be probably a bit of a free fall back down to 7,000. So the tech sector is probably going to get absolutely demolished, absolutely killed in this movement through here. And the same for looking at the Russell 3000. You can see, the Russell 2000. You can see how we broke up and we found support on this trend line. Now we're finding resistance and we're breaking back down, and now we're right at this level of support through here. So once we actually break this level, we're probably going to go through a bit of a free fall, which is not a bad thing, guys, right? Just look for a lot of good shorting opportunities. So moving over now through to gold, and gold right now, guys, is in a clear downward trend. And guys, if you are trading these markets, okay? If you are trading these markets, please keep your ego out of the window, all right? If a market is clearly making highs, lower highs, lower highs, lower highs, lower highs in the markets, then just go with that, okay? Don't fight it. Someone said in the comment section below when I said this, right? And I said, okay, when we've got a strong moving average coming down and we get a pullback, there's a likelihood of it actually having a retrace down. And someone said to me in the chat box, in the comment section below, about what I just said there, when we get a pullback to a strong moving average coming down, that's generally a sign that the markets have another leg down, up, another leg down, up, the moving average is still strong down. And someone said to me, yeah, but John, your theory about that is wrong, because generally when the market rallies, the market will rally before the moving average starts to change. And you are right. 10% of the time, right? Because if you see most of the time when the moving average is strong, and this is what trading is all about, my man who actually said that comment, trading is all about what? Probability, no certainties, right? So when we look at the market, there is no certainties of anything happening. If you're looking for that, go sit in the corner, there's a blankie and a bot pot, and you'll be okay. You're probably going to die in 5 years of boredom and nothing going on in your life, but you'll be okay. There's a blankie for you, okay? But if you're willing to actually enjoy this world and take on a bit of risk sometimes and so on and so forth, then, and look at the market, right? There's a probability, and I'm telling you right now, most of the time when we have a strong moving average, either up or down, and we end up getting a pullback, most of the time we get that. I'd have to say 80 to 90% of the time we get that, and 10% of the time we start to get a bit of a change in trend. So that's the reason why I made that comment. If you look, same thing with the S&P 500. Look at this here. Whenever the moving average was strong up, look at this here. Look at this here. Strong up, pullback, bounce. Strong up, pullback, bounce, pullback, bounce, pullback, bounce, pullback, bounce, 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 and then the moving average flatten out. Come here, bounce, bounce. See what I'm saying through there? Right? So what I'm saying is that most of the time, I'd have to say like 80% of the time when the moving average is strong and the market's coming up and the market does that, it's telling you we're probably going to get a bit of a bounce. Now, sometimes we go through here, but we're probably going to get a bit of a bounce, okay? So that's actually a bit of an analogy of what I'm looking at there for the overall markets through there, okay? So there is no certainties, all right? That doesn't mean that the market's definitely going to drop right now, because yes, you are right. The market could rally here, but on a probability basis to help you actually trade the market, to start to understand what's going on in the market, if we look at what the moving average is doing, then we can see that, right? But what you also want to keep an eye out for with the moving average is when it starts to be strong through here, is when it starts to, if it starts to flatten out like this, right? So if we drop through here and then the market does that and the moving average starts to flatten out, that's going to tell you that with the momentum on the downside is possibly coming to an end, right? But for now, what are we getting? We're getting a very strong movement on the downside with what? Lower highs all the way down. So don't fight the market. The market is talking to us. And what is rule number one? My friends in the chat box, my good old friends in the chat box. What is rule number one? Rule number one is trend analysis. Lower highs, higher lows, that sort of stuff, right? And the trend is your friend until the end, okay? I don't want to see people emailing me like I had someone recently who basically lost, I think, like $140,000 in the last 6 or 12 months because he's probably doing the exact opposite of that. He's trading against the trend. Remember, guys, you, me, we don't mean shit to the markets, right? We're the little dibbly dabblies, right? Even if all of us combined, we're the little dibbly dabblies, right? We don't move this market around. The big guys move this market around, right? The big guys are doing their thing. So they're leaving their footprint, right? The footprint is the trend analysis in the market. So let's go have a look at the good old interest rates. And here, check this out, right? So I said before, I believe Robert Kiyosaki and a lot of people out there that savers are going to be losers. And even Ray Dalio came out recently and said cash is not trash anymore. He's changed his mind, right? And check this out. So as we know, the whole thing about savers are losers and so on and so forth, as Robert Kiyosaki's been saying, is why, right? Because the value of the dollar is getting cheaper and cheaper and cheaper, and you really can't even get a good interest rate, right? To try to get even a really good interest rate is going to be horrible. I remember when I was growing up as a kid, and it's like, 5% interest rate, from the ING. I think it was ING at the time when I was like back in the 80s, right? ING. Back in the 80s and 90s, right? The ING, 5.6%. Oh, come right now, right? So, and then as we know, right, like right now, what are you going to get for savings? There's not much. Or that's I'm not exactly sure the savings right now, but you're probably not going to get much if you leave your money in the bank, right? So, and that's obviously because of what's happening right now, the markets, low interest rates, et cetera, right? Because we've actually had a declining of interest rates overall. And right now, we'll look at the overall 2-year, and let me actually bring up just a line chart here. We're looking at the overall 2-year of the interest rate, right? Lower high, lower high, lower high, lower high, and big significant lower highs all the way down. Big downward overall trend, right? All the way down. But now look what's happening here. Look at this here. Big moving up. What does that mean? This means that there is a high probability, yes, we're going to get a pullback in the interest rates. That's going to happen. This 2 years just gone absolutely just crazy move to the upside. So we're probably going to get a pullback through here somehow, right? Whether the Fed does QE again or something like that, or, all that sort of stuff, right? That, Q again and starts, pushing the interest rates back down. But overall, the sentiment has changed now. The sentiment, the send me a mint, as a Jay Bravo would say, the send me a mint. Shout out to Jay Bravo. The send me a mint, right? The sentiment has changed. And now the sentiment has changed now for the next 30, 40 years. What is the sentiment change? The sentiment change is now, even for the next 10, 20 years, we're possibly going to start to see interest rates like this, right? And this is going to be a recession period, and this is going to be a recession period, and this is going to be a recession period. But the sentiment has changed. Instead of knocking it down all the time now, we are going to go through a period of much higher interest rates over the next 20, 30 years. And so that's where my kids and your kids that are growing up right now, if they're, say, around that 10, 15 mark, over the next 10, 20 years, they're going to be able to be in a much better position that savers are not going to be losers, because we're going to start the banks are going to start to give a much better higher interest rate. And especially, and if you're in your 30s right now or in your 40s, this is going to be good for you as well too, right? Because if you can get to a point where you've got like a couple of $1 million in the next 20 or so years, then that $2 or $3 million that you got in your bank, do you know, I guarantee if you go to a bank and say, okay, I'm looking to deposit this here, but I'm looking for a really good interest rate, they'll probably give you a 5 or 10%, interest. Like, they actually do that for the big guys. You do realize that, right? Like the retail traders, they get like the 5% or whatever. But then if you got a lot of money behind you, a large sum of money behind you, they actually do give you a much better interest rate from that. I've seen my mentor do that many times. Now, I'm not saying $3 million is a large sum of my money. But if you did have a few $1 million behind you, then just think about that, right? Think about that for a minute. If you had $2 million saved up and you're getting a 5% interest rate, and what's that? That's $100,000 a year, right? So, and then people used to live off the interest rate and so on and so forth. So that's where, guys, that's where I believe that the whole savers are going to be winners again. And I believe cash is not trash. But in all fairness, guys, if you really do want financial freedom in life, then the ability to learn how to trade these markets is paramount. And that's the reason why I'm giving away that free trading course, to help you do that. And that's what I believe, guys. If you can spend, like for me, I only spend half an hour a day doing my trading, and then I'm off to the day to do my other stuff. So anyway, traders, that's it for me today, and I'll see you in the next video.